Hi, this is Mike Turner with another Boise real estate market update. I'm with Front Street Brokers, and the topic today is negative equity and why it's the hidden cause of our low supply and improving home prices here in the Boise market and nationwide. See, just recently in May of 2012, a nationwide study showed that the supply of homes is down 21% year over year. And a lot of people are scratching their heads of why that's happening. And I mean, really, 1/5 of the market is just gone compared to last year. So big change. Now, we all know that foreclosures have pushed down home prices extremely low, and foreclosures have been rampant across the U.S. and very, heavy in the Boise marketplace. But the foreclosures filings are down 20 months in a row. So year over row, every month the foreclosure filing drops a little bit compared to the year before, and it's a 20-month trend. So that foreclosure activity is way down. The supply of bank-owned foreclosures, on the market in the Boise area is down 92% since the peak. So in Boise, Idaho, for example, we've seen massive drops in foreclosures on the market. So that's leading to, lowering the supplies. But why homeowners are not listing their properties now that there's less foreclosures is because they still cannot compete with today's sale prices. So they don't list their homes. So even though that there's way less foreclosures on the market, if they're into their home for $200,000 and the market's still at $175,000, they're just going to wait. They're not going to list their home. Now, this negative equity is causing a restricting supply across the nation, and they see areas, markets, housing markets that have the most negative equity. I'm talking like Boise, Idaho, Arizona, Vegas, some Florida. Those types of places have a lot of homes with negative equity. And if you can see in this chart that the places with the most negative equity, 50% or more, have the lowest supply of homes in the market, less than 5 months of homes for sale in the market. That's just the supply is going down while demand has been creeping up with the better real estate news. Supply just keeps dropping because we're not replacing the homes that are being purchased, these foreclosure purchases with regular resale non-distressed homes because sellers can't still compete at today's prices. But low supply is also helping home prices increase faster. So even though negative equity is normally a negative thing, and there's lots of markets that have, even over 50% of their homes are in the negative category, this negative equity is helping to keep the supply low, and therefore home prices are increasing faster than expected. The top 10 cities with the biggest gains in the median list price, check this out. There's huge gains going on in the marketplace right now. If you can see this chart, Phoenix, Mesa, Arizona is up year over year 30%, 32%, and Santa Barbara up 30%, and Boise, Idaho 20% from year over year. This is for April stats. Miami's way up 15%. Now all these ones in the top 10% also have had a huge reduction in inventory. If you look over here to the side, Phoenix, Arizona, for example, 44% change in their year over year inventory supply has dropped. Even look at, I think Oakland leads the pack, where they've actually are down, their inventory is down 56% from last year. So over half of their inventory is just gone. And so these prices that are seeing these big drops in inventories are now seeing these big jumps in median list price. So it's not all bad news. I mean, Boise, Idaho, for example, it's up year to date on its median sales price. It started at January of 139, and now it's 179, and that's a 30% jump in year-to-date sale prices. So this is really helping the market bounce back this low supply, and I expect because of this negative equity that we will continue to see home prices at least continue to move up or stabilize. And that's really encouraging for this this not only this Boise real estate market, but the national one as well. Now, will it last forever? No. Eventually, people are going to have less negative equity. They're going to put their houses on the market, and the housing market will turn more to a normal, gradual, increasing, more historical appreciation rates, something more similar to what you see with inflation, 2 or 3% a year type of thing. But right now, it's the Wild West. Things are going crazy, and a lot of it is price adjustments, not appreciation. It's the lack of foreclosures. The foreclosures were priced at lower prices. Now that those are gone, people are having to pay for higher priced homes, higher list priced homes, and but it doesn't necessarily mean that home prices are going up. It's just that the inventory has changed. And so if someone's going to buy homes today, the inventory is going to change. And so you're seeing these radical shifts right now. But it is good. It's good for consumer confidence. It's digging us out of our hole. And so negative equity isn't always a bad thing because it's helping keeping supply low. That's it for this week. I hope you enjoyed this market update. Feel free to like or comment on the video below. And we'll see you back next week. Again, this is Mike Turner with Front Street Brokers.